Hey, welcome to Fish Innovation. Excited to bring this special episode out today. We know that we've got a lot of talk given the market and how things are down. And I know this isn't typically a market podcast, it's about product strategy and innovation, but product strategy and innovation that helps small business owners and entrepreneurs help grow and scale their companies. And so, one way to help grow and scale is to think about your cash flow and your capital and what are some out of the box innovative ways to do that. So today we have on the show a great guy. His name is Chris Kidd. He's been doing all different strategies to help businesses grow, find profitability, coaching, you name it. And he's going to talk to us today about some innovative ways to really have access to capital and de-risk a lot of your financial strategy that you may have for your company today. So with that, we'll get going. Chris, welcome to the show.
Hey, thanks for having me.
Yeah, I'm so glad we can do this. I know this is on everyone's mind, given the stock market and what's the future of the market going to look like. What do we do about our finances? But before we get there, I'd love for everyone to hear about your journey and what brought you to be the expert in the field today.
So I'm a pretty unlikely story for where I've gotten to, but I grew up, I've been a coach's kid my entire life. I mean, literally my dad's coached me since I could walk. And then, through playing in, little kid leagues up to junior high, became my coach in junior high and then moved up with me in high school, coached me all the way through high school. And I know this is not market related, but it does have a point. There are a lot of things that I learned throughout that time. One, just about everything that it takes to be an entrepreneur and to be successful at anything in life. One of the things that I say is like sports teaches you more stuff, more life principles than school does. A lot of people don't like that, but that's just how I learned. And if it had not been for what I learned in that environment, I certainly would not be where I'm at today. So following high school, I moved to San Antonio and my goal was to play basketball. And there were a couple reasons I went to school. Everybody said you need to go to college because otherwise you can be making a living at McDonald's for the next, the rest of your life. So I was like, okay, so I'll, follow what everybody says, the path to success. Go to school, get a degree, I get good grades. That was not my strong suit. But the real reason that I was in school was I wanted to play basketball and I wanted to meet girls. So those were the two real things there. Along the way, kind of speed stuff up. My freshman year in college, I was introduced to a young multimillionaire and he kind of took me under his wing. He saw himself in me because when he made his first million, he was like 21, 22, something like that, and took a liking to me. And I told him I was hungry to learn. So I didn't come from a wealthy background. There's not a lot of high school coaches that are multimillionaires or anything like that. So my goal was to make, $60,000 a year coming out of college. And I thought that was a lot of money. And then my mentor tells me that I don't know how people live on $100,000 a year. And I'm like, $100,000 a year, that's rich. What are you talking about? So my world got distorted a little bit. And at that point, he asked me a very important question. It was, well, what are you reading? And I said, well, I don't read. I read two books all through high school. I read Brian's Song because it was a sports book that caught my interest and it was really short. And I read Friday Night Lights because I was born in San Angelo, way out in West Texas. So I grew up around, the whole football. Football's big in America, but it is like God in Texas. So that's God's sport. So those were the books that I read all through high school. And I said, I don't read, I listen to music. And he said, for $500,000 a year, would you read? I said, well, yeah. And he said, well, you'll never get there if you don't start reading. So I said, well, what's the first book you want me to read? And he said, there's a book called Rich Dad, Poor Dad. So that book broke my brain after chapter 2. And I really started thinking differently about money. And around that time, I came to a decision point in my life. And I said, where do I want to be in 5 years? And I determined, well, by the time I was 25, I wanted to be a millionaire. And I made this decision that I would not spend a dollar that did not take me towards that goal. So for the next 5 years, I wouldn't do anything that wasn't. I needed food for fuel because obviously, if you can't live, you can't build a business, you can't make money. But I lived on basically ramen noodles and water and the little dollar Tostinos pizzas because those were cheap. They're not a dollar anymore. I don't remember what I saw in the store the last time I saw them, but inflation, it's gone up. So I was living as cheap as possible, and everything that I had, I was putting towards my future. And the one thing that I learned from Robert Kiyosaki was, focus on building your asset column. So that was the biggest thing I was focused on. And around that time, I was doing a lot of stock market investing, and I'd started learning a lot about that. Honestly, from about, from my younger years, from putting stuff aside a little bit up until I would say about 19 years old, I really had just kind of gotten lucky that, I just set stuff and left it. And some of the things that I'd put it in did well. But then I started learning and understanding the market. And that really changed a lot of stuff for me. I don't know if you want me to expand on that part, but I want to leave you room for questions.
Yeah, that's pretty awesome. Being able to sort of think about where you want to head, listening to folks, and then being able to find that mentor early on. I think it's really important to in any industry as an entrepreneur or a small business owner. It is important to have coaching and folks in your life that can make an impression because we all can't do it alone. So it totally makes sense, and that's awesome that you were able to pick up and do that. With that information, right, that you've been gaining over the years and what you've been doing, what are you doing now with it?
So, well, I kind of transitioned from that because I built a couple businesses in that time. And at one point, I took about a year, well, no, probably 6 to 8 months off is probably what it ended up being. I got this really like a depressed feeling that I was feeling one morning. And I was like, why do I feel like this? Because I wake up when I want to wake up. I go to sleep when I'm done, when I'm ready to go to sleep. And I'm living what people think is the life. But I really feel kind of depressed. And it was because I was unfulfilled. I wasn't pursuing a purpose anymore or doing something to help others. I had a business, had some investments going. And at that time, my goal had been to just not have to work for anybody else. So then I decided I'll never do this again on, just retiring early and not doing anything. So I started thinking, well, what's the next thing that I want to do? And I asked, a few friends, and they said, well, why don't you start a business teaching teaching some of the stuff that you've taught us about business, money, investing, stuff like that. And the first thing I thought was, I don't know if I can. I mean, I'm not licensed. I don't have a degree, all of this stuff. So I had to check with an attorney, and they actually said, well, the way that you teach, it's actually better that you're not licensed. In fact, I've got a wealth advisor who had talked with me about coming to speak to his people about some options trading and how to use those in a safe way and a way to build wealth for more conservative investors. And the way that I can explain stuff, he's legally, by law, because he's licensed, he is not allowed to tell them to use certain terms so that they can understand it better. So a lot of times people will go to advisors and they're like, oh, well, tell me this and that. And they use words that the investor is completely lost. So they're turning their money over to somebody to manage for them. And it's just like, okay, well, I don't understand this. So you're the professional, you take care of it for me, which that's great when you have a good advisor and they're doing good things with it. But what happens when you run into somebody like Bernie Madoff is what I always say. And even if your advisor was good, if something happened to them and you're looking for the next person that you know, like, and trust, and that you believe that has your best interest in mind, and that person's Bernie Madoff. So it's really good to understand what questions to ask. And if nothing else, if all you do is learn the right things to ask your advisor, you can get way better performance out of them just by knowing the right questions and how to evaluate stuff. So the reason for an advisor is not to get the answers, it's to get ideas. And if you are educated enough and sophisticated enough, you can ask the right questions. You can have people bring a whole bunch of ideas. In fact, a lot of my clients bring me ideas and I just help sift through stuff. And I'm like, yeah, I like that when you know how to read stuff. Yeah, that's one of the things that I do teach, is because it's very dangerous to just allow somebody else to handle your financial future. And then if it doesn't work out, it's nice to be able to blame somebody else, but at the end, it really comes back on us.
Yeah. Well, 100%. I think it's always, and no matter what you're doing, and especially with financial services, being your own advocate is great. So I think, definitely, having some of that knowledge and learning and partnering and collaborating with that advisor, right, to bring you to that next level. So you're able to kind of, pick up that skill. And so you're able to kind of teach these classes. And so I know when we talked, it was something about options that I know that people can be pretty scared, right?
Yeah.
And you had a neat story about it. And I think it's important. I mean, options, yes, you're not trying, you want to be financially responsible, right? When we're doing investing. And so I was sort of taken aback when I go, oh, options, interesting. As a risk mitigating tool, interesting. Okay. So I think everybody would love to hear about sort of how options can help somebody and, what's the right way to go about it.
Yeah, and it's definitely true. Options can be weapons of mass destruction when they're in the wrong hands or when somebody doesn't know how to use them correctly. So whenever I talk to somebody and they say, oh, options are risky and this and that, I know that that person is more than likely using options the absolute worst way. And the lowest level of option clearance is the most dangerous. So they'll give you option clearance, typically a newbie, you can buy calls or you can sell call or you can buy puts. So you're basically, and for anybody who isn't familiar with options, just on a real quick introduction to that, I learned about this in Robert Kiyosaki's fourth book, Retire Young, Retire Rich. He was talking about the velocity of money and how fast your money can work for you. So I learned along the way, obviously, to go from 19 with nothing to a millionaire at 24, I had to learn to speed up how fast my money worked for me. When I found that, okay, options is something like, let's say, for instance, you have a stock that's trading for $200, and 100 shares of that would cost you $20,000. So you could buy an option contract that allows you to control that same stock, not own it, but to control it for maybe $200. So $200 is controlling $20,000. So that's the beauty of leverage. Well, what they don't tell you in stuff like that gets you excited about options is if that's the way that you're trading options, you might as well go to Vegas because all you're doing is gambling. And those options are probably out of the money, which means the option is farther away from the price that the stock is actually trading at right now. So it has to get to that price plus cover whatever the premium was. So if you paid $2, it has to go up to whatever price that you bought the contract to buy the stock at, and it has to go $2 more for you to break even. So what was the other part of the question? The risk management. So so there's what most people do is they make a bet in one direction or the other. It's going to go up or it's going to go down. But there's ways to use options, which it would be like drinking from a fire hose if I tried to explain it right now. But there's ways to use it to where, one, you can prevent loss. You may be able to, you can at least really mitigate it to where the loss is limited, or at sometimes you can actually totally eliminate the risk of loss. I know because I shared one of these with you the other day. There was a trade I found where the worst possible outcome, the way that it was set up, is I would make $2,000. I used no money, and the worst possible thing that could happen was to make $2,000 or to make $52,000 in a week and some change. I like those odds. One of my mentors once told me, as I was coming up, he said, when it comes to investing, you can't be scared. You don't be stupid either, but you can't be scared. He said, if I can live with the worst, the answer is always yes. And I could live with only making $2,000. So that's when people tell me how risky options are, I'm like, okay, well, let me see how your portfolio is structured, and I'll tell you how I could structure it with options, the exact same portfolio, controlling the exact same way, having even more upside probably, and reducing the risks significantly. So without getting into all the details, which would completely lose people, there are ways to use options, and I like the word options because I mean it's kind of a pun because there are a million options that the options provide for you. And you don't have to have a market that's going up. You don't, I mean, you can make money if the market's going down. You can make money if it's just going sideways and not moving anywhere, or if it's all over the place. So you just have to know how to read the particular like most of the time you see investors who are either fundamental investors or they're technical investors, and most of the technical guys are short-term traders. I'm not big on day trading. I know that you can make a lot of money day trading. I got friends that are day traders. That's just not me. I got other stuff to do. I've got clients. I'm doing business coaching. I'm doing a million different things. I don't want to be glued to the market all day. So I know ways that you can structure stuff with options. You have to know like time frames, like how long of a time frame do you want to put this trade on for? And then you weigh out cost and risk reward. And I'm trying to explain it without having to go too deep and lose everybody. But I will say, if you have more questions, info@chriskidd.com is my email. If you want information, I'll send you my free Mastering Options Trading ebook, but info@chriskidd.com. But yeah, there's a million different ways that you can structure options to significantly reduce your risk. And especially in times like this, I mean, we only lost $5 trillion in the last 2 days. But what if not only, okay, well, it'd be great to have said, I didn't participate in the loss part, but what if you could have participated in the profit part? I had one client on one particular trade doubled his money in 24 hours. And the only downside was he didn't hold on to it for another day because it got worse. But it was based on volatility. There's a million different ways to take advantage of that. And it's really all about the velocity. And if you want, I can go into my actual strategy, like my personal formula that we talked about as well, because there's a million different things that people can do based on their lifestyle, their investment style, and things like that.
Yeah, I mean, I think so. I think people would be really interested in hearing that. So if you think most of the audience would be folks that are entrepreneurs, founders who are very busy, who don't have time yet, would want to see that quick return to help fund, right, the stuff they're working on, or even small business owners who just, it'd be nice to have some, I don't know if we call it residual income, but, another stream of revenue that can help maybe supplement whatever cash flow needs are there. So if there's a strategy for someone who doesn't have a lot of time, what would you recommend for them?
Well, so number one, my personal strategy is I love business owners because, like, my personal strategy is I want to build businesses. And I say that that's the fastest way to go from 0 to 1,000,000. And even the only thing faster from building a business and going 0 to 1,000,000 is buying an existing business that is already at 1,000,000. But, and you don't have to have money to do it anyhow. But yeah, so I love working with business owners and busy people because that's where I come from. It's like dealing with myself and athletes. So my personal formula that I used for my life doesn't mean that it's right or wrong, but I build businesses and then I take chunks of money, put it into options, and I trade options and grow that up because the velocity is so much faster. And then I look at that as like a speedboat or a jet ski, really quick to maneuver. You can go from here to there, get I'll just call it a quick score. It sounds kind of gambling like to describe it that way, but it's not gambling either. I hate gambling. So I take it from there once I build that up and then go move that into apartments or something like that. So, and that's my cruise ship. And one of my friends had said, well, why don't you just trade options? Because you can make so much so fast. And I said, well, okay, well, there's a couple reasons. One is trading options is not residual income. You have to go out and find it like you're a hunter or something. You have to go, hopefully nobody gets offended by me using a hunting reference, but I know not everybody's hunters, but that's what it is. You're out hunting for something. You're looking for a trade and you have to find one. And sometimes if you try to force stuff, that's where people make a lot of mistakes. So that's one thing. I got to go locate the next deal quickly, like next month. Versus real estate, if I have something and I dump it into an apartment over here and that's cash flowing, well, I don't have to go look for another one to get the check next month. It's still cash flowing. Also, there's tax reasons so that Occasionally, one of the things I said is if I make $1 million trading options, then I'm going to keep about half of that, or about 600,000. If it goes into real estate, there's ways that you can collect money tax free. If you make $1 million, you might keep 1 million over there. That's a more of a long term cash flow play, but you're using the short term ways to build, for that velocity of money. You want to grow it faster and build that up to put towards, let's call it your retirement or whatever. And another thing, I don't like the stock market for retirement. Ooh, that's scary, huh?
Yeah.
Most people, especially for advisors, say, hey, put your money in an IRA, 401k, this or that for your retirement. Well, the thing about that is it's not like really the steady cash flow. I know that they say, yeah, move it into bonds, and if everything is right in a perfect world. But a handful of years ago, people who had, if they had just retired and their money was in bonds because it was safe and secure and it was going to pay them, well, you know what? They were getting nothing on that because the Fed had dropped rates so low they couldn't survive on that. So your retirement plan should not be a number that you need. It should be cash flow. Like how much do you need per
Yeah.
month and what can
Yep.
I do to produce this? Go ahead.
No, yeah, 100%. I mean, I think you're absolutely right. Just, I mean, you nailed it. Being able to say, how would it, when you retire, what does my cash flow situation need to be each month, as opposed to, okay, great, I need to have, then therefore I need to have $2 million in savings. No, no, no. Like, what do you, you got to figure that out. And so I think it's a really great way to think about it that way too, as well, especially people who own businesses. That's how they think about their own business as well, right? What do I need to do each month? So we should be able to do that in our own personal lives.
Yeah, which going back to the business part of it is if it's great for business owners. One, you have to create additional cash flow, additional revenue to where you have reserves to do something with. So if you're not in that spot yet, you might email me for my book, Unlock Your Revenue. But that's got some ideas to help with that. But you want to have some sort of reserves, and if you have enough reserves, you don't want your money sitting there earning absolutely nothing. And if I told you you could earn like 4 to 6% per month on something very very conservative versus having it sitting here in a savings account that's earning 0% or in a mattress or something, it's nice to it gives you a certain amount of comfort to have cash there. But if you think of your money as employees, do you want your employees sitting around? Like I had a construction company and we had 25 employees. And if I would come out and I saw, let's say, 90% of those guys just sitting around, I would be upset.
Yeah.
So, I mean, your money is your employee. Send it out, make it go to work. It just don't do stupid stuff with it. And that's kind of where I come in, is like helping decipher, okay, is this a little too much risk for me to do with this? Or what could I do to make this money grow while it's sitting here? I do the same thing with real estate. If I got money sitting aside for a real estate investment, I can put it over here and make it grow a little bit while it's sitting here without really putting a lot of risk added to it. So and I don't care if it's just a little bit. If I'm getting 1% per month on my money, that's still better than zero. So I'm not going to put it at risk of total loss for 1%. That would really be crazy. But to do stuff that has little to no risk, kind of like I had mentioned earlier, like if the worst possible thing that could happen is I can make $2,000, I'm absolutely going to do that. I will put my money to work over there as much as I can. So yeah, so business owners can do that. They start, putting something aside to build that up, and then as stuff grows, they can get more aggressive and then start putting stuff into, like, just follow that whole strategy. Not that they have to follow my formula, but they could move it to something that's going to grow it faster and then move that into something that's okay, what's my long-term play? And it might not be real estate even that they want to move it to. Maybe they want to move it into buying another company and expanding, or who knows, whatever it is that they want to do. But there's strategies that you can apply, and these are just some good ones that work really well.
Yeah. Well, I mean, it's this advice is not just within investing, it's with running your own company, right? How would you, think about the assets you have and the what do you the decisions you're going to make. Of course, you're going to want to build that foundation, and once things start flowing, then yes, you can be a little bit more aggressive and go out there and change your pricing or change your product. Or so, of course, there's that initial work to start to get there, and you're kind of saying the same thing, as opposed to just your business. It's now your money, and you're putting it, like I said, like you said, it's on the side in different places, and you're going to put it in like sustainable growth areas. And you mentioned real estate. Yeah, real estate. I think we've all lived in homes for several centuries now. Probably not going to change that in the next few centuries. Probably still going to have a shelter over our head. That's how we survive and we live, and how we pay for things. So speaking of trends and in the future, how do you see something like options, or maybe not even options? Like, how do you see people and their businesses growing over the next 5-10 years? Like, what are some of the strategies that they should be thinking about now?
Well, I always want whatever I'm doing, I want it to be growing. Whether it's the business, whether it is my investments, to say, yeah, well, if we're going to do about the same amount of revenue as we did last year, we're keeping pace, whatever. If the last 5 years you've been stuck around a million, or say $1 million to $3 million in revenue, and you just can't, you're not being able to get past that cap for whatever reason, something needs to change. Because inflation, here's one that everybody's been going crazy about, which I know it's down now, but up until, let's say, the past month, eggs, the price of eggs had skyrocketed. And if you had been buying eggs, the same eggs that you were buying 3 years ago was not equivalent to the same eggs that you were buying 3 months ago. You could only get maybe a third of the amount. So you have to find ways to grow your business and grow your revenues, and to get more out of your employees. But at the same time, you also want your employees to know that you care about them. That's really important. You'll get way more out of them if they know that you care. And then the AI stuff is totally changing the business world. And depending on what area of business you're in, it may change more than others. I know some people are worried about jobs becoming obsolete. Some people are getting upset to saying this business owner is going to replace me or my job, or all these people, all these jobs are going to get cut because of AI. That might be true, depending on what industry they're in. And you know what? Sometimes we have to learn things, because when I was going to school, I wanted to major in computer science, and then I took a calculus class, and I said, okay, this isn't for me. But, sometimes we have to change our direction in life and learn something new. I didn't know anything about business. I didn't know anything about investing. I certainly didn't know anything about options. And funny story, I understood, because I'd heard enough that how options were risky, and I'd talked to an advisor of mine at the time that I told him I wanted to learn to trade options after reading Kiyosaki's book, and he's like, let me tell you, those are risky. I've never met anybody who's made any money with them. Well, okay. Well, and then I found out most advisors don't know anything about options either. I've actually trained some of them to pass their tests and get licensed, because they weren't getting the education that they needed to understand it correctly. And I had one friend of mine he had to pass the test the next week. And he's like, I keep failing it, and I've got one more shot. Can I spend a couple hours with you on the weekend? And he aced the test the next week. So anyhow, if you're somebody out there trying to pass your test and get licensed, hit me up.
Yeah.
But yeah, so all the things are changing, and I thought, well, hey, I need to learn something new, and everything is always evolving. So if it's something that you're worried about your business or your industry or your job, don't just get mad and say, okay, well, this isn't fair. I would hate to be in the situation, but if I'm about to retire in the next 5 or 6 years and AI is going to replace my job, some people will just say, I don't know what to do. I'm going to hope and pray that I don't get replaced. But then if I do, I'm just going to complain and blame it on, AI and all this stuff. Well, no, be proactive about it and learn something new that you can do, and plan ahead. Like, if you have money to work with right now, how fast can you make that money work without being reckless with it? Because a lot of people try to go fast, but they're reckless. Like a person that came to me at the gym and said, I've got $5,000. I need to make $5,000 a month. Can you show me how to do that? And I said, well, I might be able to help you find something that will make you $5,000 a month, but every single month, just go to Vegas. It's the same thing, because you're gonna have to gamble to get those sort of returns consistently. And if you're gambling, you're not gonna get those returns consistently.
Correct. Yes.
So yeah, it's a matter of learning new skills and it doesn't really even take that long. I tell people, look, so what I was saying about the options, I understood that it could be risky, and I wanted to make sure I wouldn't lose a lot of money on doing something that I didn't fully understand. So I studied options for 2 years before I made one single trade. The first trade turned out pretty good. I made like almost 400% on my money in 3.5 months. But it took me 2 years of studying to do that, and not every single trade is like that. And people who tell you that when they advertise that online, that's to get your attention. You can make those kind of returns, but you're not consistently going to make 300% every single day or every week or anything like that. If somebody tells you that, run. Even if they show it, yeah, I can show those returns, but that's not going to. Let me show you the losses too, because you're not going to make consistently that sort of return without a high risk. So I said, well, what if I can condense that? So now I tell people, look, I can condense what took me 2 years into 90 days. How much is that worth for you? So just learning, it doesn't take that long. It just takes time and effort.
Yeah, 100%. I mean, I think that's the way to go about it. A lot of people, it seems easy, like, ooh, a lot of money. I could get that really simply, and that's not what you're saying. It's being able to build again that foundation. So being smart with the money and being cautiously optimistic. You're going to win some, you're going to lose some. There will be some home runs, there will be some signals, but how do you optimize those combinations so that way, you're not just striking out every time you get up, right? I think it was, I don't want to go into stats on this, but you got like Ken Griffey Jr. or something, who's going to hit a home run. He's a great ball player. I'm a big Seattle Mariners fan, of course. But the guy would strike out a lot too. Was he like a home run or or as an out, right? So that's great. I mean, he still has an incredible career, but I'm sure most of us, if we were doing that with our money, would be quite stressed all the time. So I think this is the way you have it all set up is really great. You're mitigating your risk. You're getting, you may not hit a home run every single time, but you're going to have those home runs. You celebrate them when you get them, and then you go back to hitting singles. You just keep growing and growing and growing. You'll be able to get riskier and aggressive as you keep moving, and just takes time, and you'll get there. So I think it's a great parallel to your business as well. Thinking about how you're going to be building, it's foundational, putting in the work to get to that product, that idea, that concept, get it tested, get it fleshed out, get it out there, and grow and iterate and change it, and then you'll get some wins. You'll see how it goes. Keep stacking it, adding it, and boom, there you are. So I know you mentioned, right? People can reach out to you to make connections. info@chriskidd.com. I think it'd be great for them to reach out and help get resources or figure out things, because now, especially with how the market was going, we don't Monday, Tuesday, Wednesday, who knows where it's going to go. If we all had crystal balls, then we wouldn't need advisors, right? We'd all just be making money constantly.
Just from studying patterns and seeing stuff like this, I probably shouldn't say it, and I know this will probably come out after Monday, but making any kind of prediction, I could be right or wrong. There's a 50-50 chance, but I was looking at the close on Friday, and there were a couple things that I was looking for to tell me if it was over or not. I don't think it's over, because the market closed on the lows, and typically when you see a huge sell-off like that, if it's done, it usually will reverse. So that told me that I don't think it's done yet. And there's a lot of what ifs. There's a lot of factors in there that, the tariffs and all of that. There's a million different things that could make it swing either direction. I think what we'll probably see Monday morning, when this plays, we'll see if I was right. But I think the market will actually open up, just because it's kind of like a rubber band. It's been stretched so much, it's going to pop back, but then it'll come back down. That's my thoughts for Monday morning, and I might be wrong. I could also, knowing that, I could structure something going into that to say, okay, based on this, here's the trade idea to where, what I think will make us money. And so this is a really good, very important point. If I'm going into a trade, the first question I always ask whenever I'm structuring something is, what if I'm wrong? That's the number one thing that I always ask. What if I'm wrong? Because we never think that we're wrong. But what if I'm wrong? And what would make me wrong? And what would that look like? What would cause this to make me wrong? Like what factors, what different events or circumstances would have to happen? And so we start planning for that. Like it's just like a sports team. Like I said, I've been a coach's kid my whole life. I've grown up playing sports. I used to eat, live, and breathe and sleep basketball and football, and that was like all I ever thought about. But so in the sports world, you have plays for certain situations. They have the playbook in the NFL that looks like a big menu, and it's like, okay, well, on 4th and 1, what do we do here? Are we going to go for it? Or are we going to punt? Where's the ball at? What kind of defensive strategies have they been running on 3rd and 6? What's the play calls that we would do on 3rd and 6? But you have different things based on different potential outcomes or different strategies. What if they line up in this defense and we come out? I mean, you got the quarterbacks; they have the audibles that they call. There's a reason for that, because if we have a great play called, but the defense lines up in the perfect defense to stop that, well, we may have to call an audible, and we have to know how to do that. The great quarterbacks are great at doing that, and then the ones that are not as great, they may not read it, they may not see it, and then they get obliterated. And it's the same sort of thing in the market. You got to be able to adapt and adjust. And I had a client the other day I was working with something on, and I said, well, if this happens, here's a way to get out of it, because you may or may not be right about this. If you are right, then you don't have to worry. But if it turns the other direction, here's how you can do it without losing any money and potentially turn it into a profit. And same thing with like in business. A lot of times when people get flush with capital and they've got a lot of extra cash reserves, they do stupid stuff.
Yes.
Or if they borrow money and they've got a lot of cash available to them, they're a lot looser with the money rather than being disciplined. And it's like a team that has just been great for so long and they get complacent. If you get too cocky and complacent, life has a paddle for you. And that's the most dangerous time, is when you think that I'm bulletproof. And anytime that I feel like that, when everything's going my way, it's like I can't do anything wrong, I'm looking like, okay, what could happen? What if I'm wrong, somewhere? So just because you have extra cash available and extra capital doesn't mean go do risky stuff. There's a difference between risk and risky. There's high risk, high reward, but you can do high risk things that are not risky things, because there's ways to mitigate that and make sure that you're not taking on a huge amount of risk. So that may not make sense to some people, but there's a huge difference between risk and risky.
Yeah. No, agreed. I mean, you said it, no matter what you're doing, it's calculated risk, right? Being able to see both sides. I'm not going to repeat everything you just said, but that was, exactly, would be the best way.
Don't take too long.
Yeah. For folks, so they can listen or watch, right, and they can rewind and hear to play it over, and they can also write you as well to get more insight. So I appreciate you coming on. This has been phenomenal. I think a lot of people aren't thinking about how the market can help them today, right? They're only kind of thinking about the negatives of that, but it's like, hey, get a plan together, contact Chris, get information on how to be more financially responsible, to be able to get to that point where you are aggressive and you're growing money for your company, your corporation, yourself, your family, you name it, and you're using these strategies to the fullest advantage. So, Chris, thank you so much for joining us.
Well, thanks for having me. And I'd tell people, if they send me the email, chriskidd.com, to ask about anything that we've talked about here. Again, I said that I've got the Mastering Options Trading ebook for them. I've got to Unlock Your Revenue for business owners. But put fish in the subject title. That way, it'll be one that will pop up quicker, and I'll know where they came from and get back to them as quick as I can. One other thing I would add is something that's very dangerous in the business world and the investment world, and with anybody planning to retire, is the word hope. Hope is a good thing, but when it comes to running your business or investing, if somebody says, I hope this works out, or because a lot of people right now are looking at the market and they're saying, well, I hope this is over soon. I hope things go back up. I hope things don't get destroyed too bad before I retire. Hope's not an investment strategy. Hope is not a business strategy. Hope is a very poor strategy overall. You want to know, and that's what I'm here for.
Exactly. Control what you can control. Get out there, make the right moves, and if you feel like you need that help, reach out to Chris. He's there to, at a minimum, get you started, but with the success he's had, I'm sure you'll share in that as well. So thanks everyone for joining. Appreciate it. Get out there. Don't have hope. Remember, if you're thinking about hope, start thinking about innovating. And with that, keep on innovating. Talk to you guys later. All right, awesome. We'll wait. It should say it in a second. Hey, let me know. Why does it say issue?